Ladies and gentlemen, boys and girls, it's another Wednesday episode of Engine Room. Thanks for joining us on this group chat. We've got Bill, our chief technical analyst, Jacob, our market analyst, and Forrest. Forrest, what is your job title, man, these days? You got a promotion.
Yeah, I'm director of research now.
Director of research, Forrest Purbich with us. Guys, this podcast is called Engine Room. We're here to help you tactfully toe the line between genius and degen. And one of the ways we do that is we help you slice and dice the various cryptocurrent events that have been going on. This week is no different from any other. We've got a lot to get through. I think we might start by talking about the fact that Tim Cook, CEO of Apple, has revealed that he holds a little bit of crypto. Uh, don't take this as any exciting news that Apple is about to throw its hat into the crypto ring, but it certainly is interesting and remarkable that a person with his power and influence is dabbling in crypto. Um, Bill, Jacob, Forrest, what do you guys think about the CEO of Apple holding a little bit of crypto?
I mean, to be quite honest, it's not that shocking. But I mean, it's a natural progression. It's taking crypto's taking over, and how do people stay away from it? You just when this much money is going into crypto, smart people can see that and they want to get involved.
Yeah, I mean, so this news came out in Deal Book, part of the New York Times, and his quote is kind of a very bland, safe, and conservative statement that we've heard a bunch of old money people say before. Is just that it's reasonable to own crypto as part of a well-diversified portfolio. Absolutely nothing controversial there, but I don't know. It's just interesting that this water level continues to rise to the point that the people who lead some of America's most valuable companies can no longer get by without chatting about it when they're asked about it. Tim Cook says it's not something we have immediate plans to do, meaning Apple implementing any kind of crypto plan. He says, I don't think people buy Apple stock to get exposure to crypto. Yeah, again, nothing controversial there, just some very conservative statements that kind of let us know, hey, we're paying attention to what's going on, and we know people are interested in this. I think Apple is much more likely going to announce car plans before there's any kind of Apple crypto wallet, but I don't know if anybody has any opinions on that.
Well, I think the guy's like, he's being honest in a way, right? In other words, he comes out, he says he owns crypto, and he buys his company time, most likely to get a wallet app or some sort of wallet in some way so that Bitcoin somehow that's in your phone winds up like possibly on their balance sheet somehow. So getting involved in crypto and getting it on your phone is probably something they're working on. One other thing that struck me about this is that, Tim Cook's a busy guy
Mm-hmm.
and he may not be self-directing his portfolio. Of course he's not. He's got a wealth manager at some, completely Porsche investment bank or
Yeah,
boutique who called him up and say, hey, Tim, I think it's time to look at crypto. And I'm
right,
sure
right.
he's looking at it, but the idea of him to own it was somebody else's idea. And then most likely his PR group decided to jump on that as well.
Yeah, yeah. As much as I like the idea of Tim Cook logging into Coinbase or something, that's almost certainly not what's happening here.
Right.
He's got people to do that for him. Um, So let's talk about a company that actually, this isn't anything we had talked about before, but I'm remembering that Discord, which is, of course, a very large chat platform for gamers and particularly crypto nerds as well, the CEO leaked a little screenshot on his Twitter that basically looks like they're teasing some kind of Ethereum integration. Now, this is interesting not because it's a guy kind of feeding people what he wants them to eat, what they want to eat, but the interesting thing about this was the incredible blowback. So many people replied to this tweet saying, "We hate this. We don't want this." Um, for Discord having as many crypto users as it does, I think it might be a little easy to forget that its primary user, just people who want to play video games. Uh, I don't know. I don't have a take on this beyond it's just not what I would have expected. This is such a forward-leaning, far-thinking company, generally speaking, that has become much more important and much more valuable over the past few years. Crypto must be part of that. So to tease an Ethereum integration and see it kind of blow up, like I'm talking, people are literally filing customer service tickets with Discord, trying to fill them up and make them backlogged, just railing against Ethereum. We don't want this. I don't know how to process that. I don't know how to slice that. This should be a dream come true for many, many Discord users.
So would this mean everything you say on Discord would somehow get recorded on Ethereum?
No. This is theoretically. Keep in mind, this is just a CEO leaking one screenshot.
Right.
Maybe he's just testing the waters. This is about making it easy to send ETH transactions within Discord, theoretically.
I see.
So it's not about a permanent record of everything you say on Discord. It's just purely about being able to pay and receive money from your internet friends on Discord. And it blew up in his face.
Yeah. So in the leaked screenshot, there showed a MetaMask and a Wallet Connect connection through Discord. And I think one also primary reason why I guess they thought this was a good idea, why I think it's a good idea, is Discord is pretty much the de facto home for NFT users. If you want to be a part of an NFT community, you're going to be in that NFT project's Discord. So that's where pretty much NFT communities live. So I guess the people at Discord were already thinking, well, we're already the home for NFT users. We might as well create a way that makes this more verifiable, and then you can have ETH transactions through MetaMask or Wallet Connect.
Yeah, I think it's inevitable. These type of integrations are just inevitable at some point. Like when you can just plug in your wallet and your money to a service, services are just going to plug. Discord's going to create a Web3 connection. It completely makes sense. Plus, I use Discord, so I'm looking forward to later on down the road a Discord airdrop if they have their own token. So I'm a big fan of this.
Well, speaking of airdrops, we got to talk about what seems to be one of the biggest airdrops in recent weeks, recent months. ENS, Ethereum Name Service. If anybody's unfamiliar with what this is, this basically does for Ethereum transactions what email does for communicating with your friends and family. Instead of having to remember a long string of letters and numbers, 0x, letter, number, letter, ENS is a service that lets you instead send a transaction to Dylan.eth or Forest.eth or Token Metrics.eth. Email addresses for Ethereum transactions, basically. And the immediate analogy here is this is like a web domain, tokenmetrics.com, google.com, except now it's just what you're using instead of somebody's transaction wallet ID. They had an airdrop, and I have not seen as much chatter about an airdrop as I have seen about ENS this week. The way it worked was that for every address on the ENS service that you registered, you got some amount of tokens. And so if you registered 4, 5, 10 addresses, obviously you received that multiple in tokens. But what's more interesting is the price action on those tokens after you receive them. So it's already gone up more than 100%. And I've heard anecdotal stories of people who have received who registered 4 domains, received an airdrop worth 20 grand, and then the very next day, those same tokens are worth 40 grand plus. So if I have a question there, I guess I kind of want to throw it to Forrest. Forrest, how do you identify the next airdrops? When is an airdrop worth participating in?
Yeah, I mean, so a lot of these protocols and projects, the way that it makes sense to distribute their tokens is to airdrop them to the users of their project, because you don't want to just distribute them to people who don't use your project, right? So airdrops make sense. And in order to participate in airdrops, well, you kind of just have to be using crypto-based products, right? A lot of times projects won't give people advance notice of airdrops, and that makes sense as well, because then people are just going to create 15 different Ethereum addresses, use the product a ton, and game the system to get as large of an airdrop as possible and turn around and dump the tokens for profit. So it really just comes down to I mean, if you're wanting to participate in airdrops, it comes down to identifying crypto projects that haven't launched a token yet, that it makes sense for them to launch a token, and then just use their project, use whatever product that they've created, and
So it's
that's about it.
fundamentally it's about being in the right place at the right time, basically.
I mean, there's people and groups that keep spreadsheets of all the products out there that don't have a token yet and could potentially use a token, and you can definitely farm airdrops, and nothing's guaranteed. But if you go shotgun approach and you use 10, 15, 20 different products, crypto-based products that don't have tokens yet, you're probably going to get a couple airdrops. Are they all going to be 20 to 40 grand? No, a lot of airdrops I've gotten in the past are, worth $500-$600 now, which is fine. It's essentially free money just for supporting a project by using the service. There's plenty of airdrop opportunities out there.
Yeah, let's see here. I'm checking out a CoinDesk article about exactly what we're talking about. It's the projects that haven't yet got a token or crypto angle that probably should. So basically, if you're sour about missing out the ENS airdrop, what are they calling out here specifically? MetaMask, and we were even talking about Discord theoretically going into some sort of Discord airdrop, probably if and when they open up this Ethereum integration. It would make all the sense in the world for them to have an airdrop and that could theoretically be huge. I mean, that community is gigantic. Anyway, that's kind of not the news I wanted to hear, Forrest. You just got to kind of be there when the time is right. But it sounds like if you're making a point of, if you're intentionally walking through the crypto world and using things that are interesting to you, you're going to get some airdrops as a result. Duly noted. And yes, I am a
the
little
longer you're in crypto, the more likely you are to get airdrops.
Yeah. Very good. Well, we've got let's talk about NFTs, because CryptoPunks, which were one of the main projects to kind of help lend momentum to NFTs overall, I feel like, just because they were among the first projects to start achieving serious prices. A CryptoPunk worth $850,000 has just sold for less than 95%. Less than 5% of that price. 95% below the current floor price. So it was worth $850K and it sold for under $20K. I kind of want to throw this to Jacob. Jacob, what do you make of this news? Why should something that's worth such a large price today sell for so little?
I mean, there's definitely multiple reasons why this would be occurring. First, maybe the owner of this CryptoPunk just needed that money and just needed to dump their NFT to get instant liquidity, get an instant buyer. Because I'm assuming that whoever bought this NFT for 95 at a 95% discount, they probably just sniped it. They probably had a bot going who was looking at bidding on any NFTs that get listed at a great discount below their floor price and just immediately scoop that up. So the holder of this CryptoPunk probably knew that they could immediately sell it. At the same time, it does seem like NFTs are slowing down, especially with Ethereum rising, that you're getting a lot of NFTs, almost bag holders, because if they bought an NFT for 1 ETH, which was, let's say, at the time they bought it was $2,000. Now they're selling it for 2 ETH because it's doubled because of the demand. But now instead of that being $4,000, it's now $8,000 because Ethereum has also doubled. So most of the times when you're looking at NFTs, you're looking at it in the scope of how much ETH it's worth, not how much US dollars it's worth. So just Ethereum increasing alone has left a lot of NFT bag holders. But yeah, this is kind of a big sign that it's almost like the death cross in Bitcoin. It's the death cross of NFTs. It's a big sign for us as crypto investors, as NFT investors, that hey, maybe the trend of NFTs is dying, and now it's metaverse, or now it's Ethereum name service, or now it's something new that we should kind of shift our focus away from.
Yeah. I want to read one paragraph from the Block's coverage of this story. It says, "The listing of the punk at this price may have been a big mistake. According to the listing history, the previous owner put it up for sale for 8,888 ETH, approximately 31 million bucks. This suggests that they may have been trying to sell it for 4,444 ETH, 19 million, instead of 4.444 ETH. Note the comma instead of the period." So one potential explanation.
Fat finger.
Yeah. One potential
Fat finger
explanation
moves.
is that this is a typo that cost somebody, more than $820,000. Oh,
Right.
yeah.
Either that, or it was tax loss selling, or somebody attempting to create a loss to offset.
Oh, yeah,
gains
that's a
who
good
didn't-
theory as well. Intriguing. Yeah.
Right. Not to mention the fact that, crypto punks are not exactly, I don't know. They're not going to wind up in an art museum in France, at least not right now.
Yeah, not this week, but it could happen next week.
Right. So, I mean, NFTs may be going in the direction of fine art and gaming metaverse functionality. So if somebody wanted to take a tax loss, take a tax loss in some high dollar NFTs to cover profits, or like you said, not the first instance in markets of a colossal fat finger. It has happened.
Yeah. We got to talk a little bit about inflation, guys. U.S. inflation is at a 30-year high, and the average price of goods is up 6.2%. So
yeah, for October.
For October.
Yeah.
So guys like Michael Saylor, they love to point to Bitcoin and assorted in crypto at large as this is how you fight back against inflation like that. Can we unpack that a little bit? I broadly understand this to mean that the value of Bitcoin and other large cryptos will go up to counteract inflation in the US dollar. Do I have that right?
Well, here's how I would say it.
Please.
Once upon a time, there was a guy named Paul Volcker who came in as the Fed chairman during an inflationary period in the late 70s. And one of the first things he said that really sent interest rates skyrocketing, he just got on the tape and said, money supply is out of control. And he had to hike rates to 20% to stop it. 20%, and create a 2-year recession. Right in the face of a new president. So that will tell you the extreme measures you had to go through to control inflation. Now, if you flip that over to the modern world, well, we know rates aren't going to 20%. They're not even going to 2%. So what is the powerful counterbalancing force? Well, it's pretty much everybody realizing, including my godson, that I need to get a PayPal account or a Coinbase account open, and I just need to get some crypto, right? I covered this on Charlie Shrem's podcast a long time ago, like 6 months ago, and then he reran it when inflation came out as like a big headline. Now it's common knowledge, but what's not common knowledge and what will be soon is that everybody with a Coinbase or a PayPal account better get some crypto. No better sign that this is like on, as in game on. Look at what is happening with Litecoin, right? People were in their PayPal accounts yesterday going, oh my God, how am I going to buy holiday presents? What's going to happen when my lease is renewed, etc. It's like human beings, like from the movie 300, right? They're just taking their shield and they're holding it up over their head, and that shield is crypto.
I see. Okay.
Yeah. I mean, if you look at inflation, if it's been above 5% for the past 5 months. It just came out as 6.2% monthly. And I don't know what the exact average is for the year, but it's definitely that inflation rising is definitely going to be higher than what you would get if your money was sitting in a traditional bank account, if that's 0.025% return yearly, or if it was sitting in a fund that tracks S&P 500, that's average 6-7% yearly returns. So if inflation is higher than the returns you could get in a bank account, or putting it in SPY or another S&P 500 ETF, then where are you going to look to get returns that outpace inflation? Crypto, which is broadly up 400% this year. So
Yeah.
In other words, the only thing that stops inflation is like a crash in risk assets like real estate and stocks.
Gotcha.
And I don't think the Fed or the president want that near the holidays. So,
well, let's see if we can dovetail this conversation into a conversation about kind of this emerging crypto rivalry between U.S. cities. I'm of course talking about Miami and New York City. So New York just recently launched its own cryptocurrency called New York City Coin. It bears mentioning that this happened after Miami did the same thing. They launched Miami Coin in September. Now we have the mayors of these cities kind of talking back and forth at each other about who can take more of their paycheck in Bitcoin. What do we think? I think overall, I think this is good for crypto. I think that's a pretty easy conclusion to arrive at. But I wonder if you guys can help me go a little deeper on it. What does it mean for a city, for an American city, to put out its own cryptocurrency and maybe start collecting tax revenue with it, or fill some other gap to increase quality of life in that city? And does it matter if the mayor is paid in crypto, or is it all public gesturing? I kind of feel like it's gesturing.
Well, as soon as the mayor of New York City starts taking his complete paycheck in New York City coin, then maybe I'll consider investing in New York City coin. But just to me, what's the point? Why you don't need a currency, a yet another cryptocurrency just to be used based on the location of your city? What's wrong with using Bitcoin or Ethereum or some other, nano Litecoin, some other digital cash solution, even stable coins, instead of just, throwing out another cryptocurrency called New York City coin? I mean, to me, it just seems kind of silly, but I'll agree with you 100% that just them taking their paychecks in Bitcoin or whatever cryptocurrency is a positive thing. I just think that, there's a reason they're taking their paychecks in Bitcoin and not in New York City coin.
This is, I don't know if this is a good thing or a bad thing, but this rising conversation about city centric crypto coins kind of makes me think about the early days of America, back when you had remote mining towns or remote logging towns where they would literally issue, they called it company scrip. The idea was everybody who's here, they're there because they're working for this one company. And the company would open up stores so people could buy their essentials, and they would pay their workers in this specific not cryptocurrency. They would pay their workers using a specific currency that was only redeemable at these company-owned stores. So I'm not trying to suggest that this is any kind of step backwards. I'm just saying that the parallels here seem remarkable. What if you got a 10% discount on your rent if you paid it in your New York City coin? What if your resort fees were forgiven if you were paying for your hotel stay in Miami with Miami coin? Seems like there's a lot of interesting avenues yet to be fully teased out here. Right now, it mostly seems like PR gesturing. New York and Miami, I guess New York might be a little bit sour after it took a bunch of heat over people leaving in the wake of the pandemic. A big part of why people love New York was to be able to go out and do things, see shows, go to bars, go to fancy restaurants. This just wasn't an option during the pandemic, so people left and they went to places like Miami. So maybe this is a new way for cities to demonstrate their rivalry by issuing crypto coins.
I also think it's like kind of a no-lose situation for New York City, because so if the city of New York agrees to partner with this company, City Coins, to create New York City Coins, it'll have access to a custodied reserve wallet that holds 30% of all of NYC Coins mining rewards. And then the funds can be used to support whatever initiatives the city deems appropriate. So it's kind of like free money for the city, free funding for the city, where they can either one, like Miami's doing it, try to spend it on crypto education or build roads or whatever they see fit. So it's just free money. And I mean, why wouldn't a mayor or another or a governor or a city official support getting free funding, free donations, pretty much? And I mean, I can see it from an investor standpoint. It's like maybe not. Maybe if you hold it, it may go up. But I think the bigger part would be to try mining the NYC coin, because if the city itself is getting 30% and 70% goes to miners, then maybe it might be a good idea to mine it. Maybe this is also, like you said, a PR, but obviously for the city, why wouldn't they do it? It's free money.
Right. I have a similar take, right? In other words, American cities are insolvent. Like if you work in a pizzeria and you get an order from a Chicago municipal government agency to deliver pizza, guess what? And that they run some sort of monthly tab, you're not getting paid. Like that's how bad things are in both Chicago and Illinois.
Wow.
So these cities can fix their finances by getting crypto on their balance sheet. They can get people pumped up about their administration and get, there's like 3 parties now, right, left, and crypto. The crypto party, everyone seems happy. Not to mention, so cities can fix their solvency problem. The governor or the mayor gets a whole bunch of PR helping their political career because, after all, what do politicians want? To get elected again. And then there's this idea of the mining, which Jacob brought up, which, either low-income people can try to participate in, or frankly, it just becomes like a form of like city-based welfare. Because if the federal government can't keep people off the streets or put a turkey in every pot like the mafia used to do in the 20s, well, then it's classic city politics. Put something in the hands of the people that makes them want to vote for you. Oh, and your city might also be solvent.
Time will tell. I mean, you can only rest assured that we're paying deadly attention to how these ideas gain and lose popularity. And right now we're very, very clearly in the gaining popularity phase. So interesting to me that no cities in Wyoming have thrown out any of their own local cryptos. If Wyoming is theoretically the crypto capital of the U.S., why aren't they? Why isn't Cheyenne? Why don't we have Cheyenne coin or something like that? At any rate, guys, Tether is going to launch on Avalanche, and I think we might want to talk about this just because Token Metrics subscribers gained access to a deep dive on Avalanche and the AVAX ecosystem. What was that? 2 weeks ago? Fairly recently.
Right.
Hey, Forrest, are you up for giving us the big picture on Avalanche and why it's interesting? Oh, you're muted, baby.
Yeah, you're muted.
There we go. Yeah, so sorry about that. Avalanche is think of it in a way as being very similar to Solana. Different consensus mechanisms, but AVAX plays very nicely with Ethereum, and they have a very good user interface, and they have an Ethereum bridge that also has a very good UX and UI. So essentially, you can take your Ethereum and move it over to Avalanche and have lower gas fees and a better overall DeFi experience very, very easily. Not only that, but when you bridge your Ethereum, you get a little bit of a AVAX airdrop. I think it's like you get 0.1 AVAX, which is like $8 or $9. I think maybe it's 0.01 AVAX. Regardless, that gives you enough AVAX for probably 30, 40, 50 transactions on the network. So you immediately don't even have to, you can bridge your Ethereum over and you can immediately start interfacing with the Avalanche ecosystem at a very low cost. And your first 30, 40, 50 transactions are already paid for. And it eliminates the friction of having to actually go and buy AVAX and then bridge your AVAX over as well as your Ethereum, which is another transaction fee on the Ethereum side of things. The ecosystem, from what I've heard, or the network, from what I've heard from several developers, is that incredibly easy and straightforward and simple to develop on, right? So from a developer's perspective, it's easier to build on. It's familiar. It's what developers are used to. So yeah, I'm pretty bullish on Avalanche. We're seeing a ridiculous amount of value leak over onto the Avalanche network and in the DeFi ecosystem. Total value locked has been going parabolic. And I have to chalk a lot of that up to this Ethereum bridge, where people are just able to really easily bridge their ETH over to AVAX.
Yeah, very good. Well, now the news item that has Avalanche on the radar today is that Tether, which is probably the de facto stablecoin for a majority of crypto users, has now implemented on Avalanche. So the idea here, let's read a quote. Implementing Tether on Avalanche would support the long-term growth and sustainability of the Avalanche network while boosting stablecoin usage across the DeFi ecosystem. Tether has also just recently launched a similar integration with BitMEX. For all the controversy that Tether has kind of swirling around it, it's not dead yet. I don't know how to interpret that, because I guess we're into a measure of years at this point. For years, people have been railing against Tether, saying you're not actually backed one-to-one by US dollars. And they've actually kind of capitulated and said, okay, some of it's debt, some of it's commercial paper, and so on. Bill, are you worried about Tether? Should crypto users in general be worried about holding Tether?
Well, let's put it this way. Remember when Tether used to be, oh my God, this is the scariest, weirdest, most speculative, dangerous thing in crypto? And how many things have we had? Meme coins, cat coins, it's NFTs. It's endless. Tether is practically blue chip. I think what Tether is doing is, obviously, they're just trying to spread their reach as far as they can, particularly since Avalanche is a decentralized network. Now, I'm not 100% sure on the thought process, but if the SEC goes after stable coins, then it makes sense for any stable coin entity to want to be as spread out as far as you can across as many decentralized platforms as you can, just in case some watchdog comes by and goes bark, bark.
Mm-hmm.
So, it just makes sense, not to, of course. Now, on another note, total value locked in Avalanche ecosystem, Forrest showed us this, is just like,
yeah,
right.
Straight up.
It's moving bottom left to top right rapidly. So it makes sense that, they would want in on that if, Avalanche is a key narrative in DeFi 2.0 with Trader Joe, right? Which we also covered last week.
Yeah, it's just kind of interesting to me how long people can throw sticks and stones at Tether. And as you said, it's just continuing to outlast every meme coin. I guess what I worry about is a hypothetical time where the crypto market crashes overall and people kind of rush to get their dollars out. And Tether is going to be the primary vehicle for doing so for most people. I guess that's a figurative bank run at that point. What happens when Tether can't handle people taking all this money out of its ecosystem? Well, it's only going to continue to tank the market even deeper, theoretically, I guess. But this is based on nothing. This is me hypothesizing completely. But I'm just kind of aware of this thing that if you have a coin that is partially backed by debt, then less than 100% of the people who use that coin are going to be able to immediately convert to cash whenever they want. So I think
the best way to look at Tether is like a junk bond. Has anybody ever wondered why in DeFi you can go places and deposit your Tether and get, I don't know, anywhere from 8 to 20% yield?
I wonder that all the time.
Yeah, Mr. Market is not stupid, right? The market is paying you to take risk. You deposit your money in this just like buying a junk bond. You could wake up one day and not get your money back.
Mm-hmm.
In junk bonds. Now, junk bonds are different now because the Fed's propping them up. So yields on junk bonds go down, but who's propping up Tether? Nobody. So, to take the risk that's associated with Tether, they're paying you to take that risk. So if you get 20%, just know why you're getting 20%. That's the best investment advice, not investment advice, I can give you.
Yeah, very good. All right, guys. Well, I think that'll do it for this day's episode of the podcast. Let's just quickly rehash here. Inflation sucks. Crypto can help you. American cities are going to begin competing with each other by who has the bigger, better cryptocurrency and which mayor is taking more of their paycheck in crypto. The NFT bubble is beginning to show some cracks, perhaps, but it also might just be a really big and unfortunate typo. The CEO of Apple is holding a little bit of crypto, and that only stands to reason that some more CEOs are going to do the same. And Avalanche, sleeping giant, parabolic value being locked into that baby as we speak. And airdrops, they're a thing. If you're into crypto, you're going to catch some, you're going to miss others, but sometimes they're going to be sleeping giants. From me and the rest of the Token Metrics team, I want to thank you for watching this podcast. We are called Engine Room. Give this video a like, subscribe to Token Metrics on YouTube, and we'll see you next time.